This is an Economic Times report this morning, paraphrasing what a bank has done. All right, we have with us Ruchit, Jain and T.S. Harihar in our studios. Thank you so much, gentlemen, for joining us. Let me start with T.S. T.S., what are your picks for the day?
Well, broadly, we're looking at three buys today morning. The first, of course, is one of my old favorites from the MFI space, which is Equitas. And we are recommending to buy Equitas at about 175 with a target of 225 in a quarter. My second is a slightly contrarian buy on Tech Mahindra at about 415 with a target of about 455 to 460 in one quarter. And the last, of course, is metals and minerals play on NMDC, where I'm recommending a buy at about 117 with a 3 months target of about 130 to 132 on the stock.
All right, three buys there from T.S. Harihar. Ruchit, what are you doing?
Hi, good morning. Basically, a couple of calls. One is a buy call and one is a sell call. Amongst the mid-cap space, we have seen a good momentum picking up in tea and coffee stocks. Tata Coffee is one of the stocks which has been forming high top, high bottom structure, and even volumes are quite good during this up move. We are expecting continuation of this uptrend to 148, so one can look to buy at current levels with stop loss placed below 138 for target of around 148. And my second call is to go short in Dabur. Probably this stock, after forming a rising wedge pattern, has been forming lower top, lower bottom formation, and we have not seen any immediate good volumes in this recent up move. Hence, we are expecting a stock to remain under pressure in near term. Well, not very aggressive targets on the downside, but just from short term trading perspective, one can sell with stop loss about 285 for target around 271 in next 1 week.
All right, target 271. The stock is trading at 279. Vishal B. Malkan is here with us as well. Good morning, Mr. Malkan. What are you doing?
I'm looking at a couple of buys which on the positional side, and I'm looking at ONGC, which is extremely having a good setup on weekly as well as monthly chart. So I'm going with a buy on ONGC with a stop loss of 260 for targets of around 290, 295 for medium term for couple of weeks. And second would be Sun TV, which is again a good pattern on weekly and monthly charts, and looking for a positional buy in Sun TV. And I'll give you the levels on that. Would be with a stop loss of 530 for targets of 595 and 625 for the short term.
All right, 595, 625 on Sun TV for the short term with a stop loss on 530. So the overall consensus today seems to be, except from one sell from Ruchit, that there are a lot of buying opportunities, technical buying opportunities, and T.S. Harihar has three fundamental buying opportunities. So Harihar, let me ask you, you think that the correction that has taken place is more or less done, or you're just picking value wherever it is available?
No, I think it's a little hard to say if the correction is done because, the way the FIs have been selling in the last couple of days, I think Thursday and Friday they sold about 1,840 crores worth of equity. So that is not a very good sign. It is typically a sign that there could be a little more of what I call, risk of buying that could be happening and risk on selling in India. So we could probably go down a little further. I'm not denying that. But the stocks that I've spoken about largely are more on, I think, individual merit rather than on expecting the market. Broadly, I think the market may be headed a little down, probably 8,450, 8,500 could be a worst case scenario as far as the Nifty is concerned.
All right, let's go through some of the stocks in news. Pankaj, why don't you take us through probably the biggest one today, which is SR Oil.
Right, entire groups and the banking space would be in focus on it. So let's start with that deal. Over the weekend, we got this much expected deal where Rosneft has come out and has bought SR Oil, as well as one of the ports that the company was owning. The total value is about 87,000 odd crores. That's an all-cash deal that SR promoters would be getting in. Most of the chunk will go back to the payment of their debt. Remember, it's one of the big group that has a lot of debt exposure. So whether it's steel, whether it's SR Oil, whether it's some of their other group companies, they have taken a lot of debt. Now, the SR Oil debt would go on the books of Rosneft. So that is taken care of. Plus, the promoters would be having about $6 billion that come into them. Adjusting for tax, they would be able to pay at least half of the debt, is what the management has said. Their current debt exposure is around 90,000 crores. That's the entire group. It includes the SR Oil and the SR Steel, which is the major chunk of their entire debt. So banks could also be in focus. Names like Axis, names like SBI have big chunk, ICICI as well. So these are some of the stocks that will be in focus because of this particular deal. Apart from this, some of the other large cap stocks that are in news. So HDFC has raised about 500 odd crores. Again, this is via overseas bonds but denominated in Indian rupees. So that's what they have done, about 500 crores. They keep raising this activity, but it tends to reduce their cost of funding going ahead. So HDFC Limited will be in focus. SBI has approved selling of 5% stake into SBI Life, which is their insurance arm. Remember, this comes in after ICICI Prudential listing, which got a decent sort of a response from investors. Tata Steels, on the sidelines of one of the conferences, said that they expect steel demand to bounce back from here on, at least in India, if not globally. They are expecting the steel demand to be decently strong. And Fortis Healthcare, they have given their entire demerger process. As a part of the demerger process, they have completed the acquisition of 51% stake into Fortis Hospitals. This is a part of the deal, and that's why it doesn't come in as a big surprise. HCC in a JV has bagged an order worth about 367 crores. So this will be also a name that will be in focus.
All right. Let's start with SRTS. What do you think of the deal?
I think it bodes well for the Indian corporate sector, and more importantly, the Indian banks. Let's not forget that some of the large banks like ICICI, in particular Standard Chartered, I think they have fairly large exposures to the SR group. And, let's assume that even half of the debt gets written off because of the money that comes in. I think it would be a great boon not only for the SR group but also for the banks that have lent money. So I see it as a very positive move. I think assets in India are getting monetized, so that is a good news. And that's good news as far as Indian companies are concerned. That is also good news as far as Indian PSU banks are concerned.
Ruchit, do you track SR Oil? Is it traded well enough?
Well, I don't think it is traded on the exchange now.
It's been taken off. So there are the two other SR counters. Is there anything that is being is worth taking a call on, like SR Securities, SR Shipping? Because the money which they're going to use, apparently they're going to be using it in SR Steel, SR Shipping. That's what some of the reports that have come in. So do you track SR Shipping?
Yes. I'm looking at the charts of SR Shipping. Probably since last 7-8 months, it has been consolidating in a very narrow range. The only thing is the very less liquidity in the stock. We usually don't see much higher volumes in the stock. Going level wise, 30-31 is the resistance, which is the higher end of the range of last 6 to 8 months trading sessions, which it has formed. But I think since it's a very low liquidity stock, so traders should better avoid this stock, and any kind of up move from here on should be ignored for short-term traders.
Haryar, there are some financial numbers which came out, financials, rating agencies. We saw DCB Bank, we saw CRISIL. What do you make of the numbers? Early days for Q2 numbers, but what do you make of them?
No, I think some of the numbers have been quite impressive. For example, I thought IndusInd was extremely impressive. They have been able to sustain this 25-26% growth on a QOQ basis. I think that's almost reminds me of what HDFC Bank used to do consistently for almost 20 years. I thought both the technology numbers, that is Infosys and TCS, to my view, were good as far as the existing quarter was concerned. Probably Infi's guidance at about 8 to 9% was a little disappointing, but I think that's probably because we have built too many castles in the air as far as Infosys is concerned. But I would believe that, broadly the traction of the business seems to be good. The current growth to me seems to be okay. And once the global economy picks up, I think both of them should see better times. NIT, I think NIT Tech with 100% growth in profits seems to be another company where I think there has been good traction, and that's good news as far as the mid-cap IT companies are concerned.
Right, but just to clarify on NIT, there was an exceptional item in the previous quarter. So if you adjust for that, the profits have actually been flat. Yeah. But Haryar, what can a company like NIT Tech tell about the sector? So Infosys was mixed bag of numbers. Numbers were good, guidance was not that good. TCS was opposite, numbers were not that great, but the management is hopeful of a recovery. Anything to read about NIT Tech, or just treat it as a separate company which can move itself irrespective of the sector?
No, there has been a big debate in the IT space, whether it is large cap IT or mid cap IT to be preferred. I think what is probably indicated by the NIT results is that even within the mid cap IT space, there could be pockets of very focused companies, probably a Polaris or a, NIT Technologies, where there is probably some amount of value that an investor can look at.
Right. Ultratech Cement will declare numbers today. It will be one of the first cement companies to come out with numbers. Anything that you would look at?
Yeah, I'll be looking at the price realizations because, I understand that the prices of cement both in West and North, North especially is a segment where Ultratech is a little active. I think the prices are up by about 50 to 60 rupees per bag. So we need to see how it exactly impacts the profitability as far as Ultratech is concerned. But we are quite positive on almost all the frontline cement companies like ACC, Ultratech, Gujarat Ambuja, among others.
Mr. Malkan, how are charts looking for Ultratech? The news flow of late has not been that great, but charts are indicating a positive move.
Yes, definitely it is in the consolidation mode since last 1 month, but overall on the weekly and the monthly chart, it is still strong. On the higher side, momentum is on the on above 60 on RSI. That means it is still continuing uptrend. So I think a move about the last Friday's high, it is around 4,060, 4,070, would take it to new highs around 4,150 to 200 in the next few trading sessions.
Right. Would you be a buyer if there is a decline and say the earnings see a one-off number here and there? At what level would you look to buy?
I would be buyer as long as it is staying above 3,900, and that would be my stop loss. 3880, 3890 would be my stop loss, and as long as I get price near to that, I would be interested to buy that.
Ruchit, your view on Ultratech?
And the broader trend has been positive. If you see the high top, high bottom structure is still intact. Well, last few trading sessions, last few weeks, we have been seeing a price-wise consolidation. So that's good that it's correcting time-wise rather than price correction. So I think this uptrend would continue forward. 4,100 is the initial resistance, whereas the super trend on the daily charts. Once it crosses that, then I think upside could be seen around 42, 4,300.
Right. Ruchit, I'll just come back to you. We should get the opening ticks anytime soon. Infosys is straight away up about 7 odd rupees. Remember, it was one of the top traded counter earlier. SR Shipping is a stocks in news. Let's see what's happening to that. In fact, the entire SR group. So SR Shipping is up about 13 odd %. Of course, they have done a big deal of SR Oil. SR Oil, of course, has been delisted. SBI is up about 2 rupees, 254. Hindalco on your screen is down about 1% or so at about 153, 72,000 shares traded for Hindalco and NTPC. There has been an upgrade which has come in from Merrill Lynch on NTPC. That's why probably it's up about 2% or so. Let's look at some of the other names that have been in news. Let's start with HDFC. Not that great in terms of volumes, down about 0.25%, 1,311, about 5 rupees decline. SBI would be in focus for two reasons. One, of course, is the SR deal that we spoke, and second is the insurance business that they are looking to sell, or they have got an approval from their board to sell, up about 0.8%. Steel names, let's look at Tata Steel, what's happening over there. They are expecting prices to go up, but really no major change over there. About 54,000 shares traded, down about a rupee or so. Fortis Healthcare should be in focus. So first, we have our report which is coming from Motilal Oswal, and second, there has been a news flow regarding the procedure towards that deal of delisting SRL Diagnostics. 177, 178. Look at the volumes, 5.5 lakh shares. HCC is up about 1%. They have got an order, about 2.5 lakh shares traded, 36 rupees for HCC. Very good volumes considering it's just 1 minute of the trading session.
All right, let's just take a look at the top trades in terms of turnover at the moment. And as usual, we take the top 50 turnover traded counters by turnover, and then we stack them up according to the gains or losses there. And Fortis Healthcare, as Pankaj mentioned, they've completed the acquisition of 51% stake in Fortis Hospital. So you see 4.3%. Godfrey Phillips is up 3.3%. ICICI Bank is up 3.5%, almost 3% right now, as T.S. Hariyar was pointing out that this is one of the counters which has a big exposure. In fact, Chanda Kochar did speak to the media right after this Rosneft deal took place, and it says that we are trying to help various Indian corporates deleverage themselves. This is probably the biggest deleveraging exercise in India's history that has taken place. ICICI Bank up now 3.1%. This is the biggest big cap gainer on high volumes. Reliance Defence and Engineering Limited is up 2.7%. Atlas Cycles Haryana Limited is up 2.6%. Nilkamal is up 2.1%. We're not seeing massive volumes at the moment in or any significant trades taking place. NTPC is up 1.9%. DCB Bank, as we mentioned, the net interest income has got up by about 27%. They came out with their numbers and significant improvement. But the gross NPAs have gone up marginally, but good numbers from DCB Bank. That's up 1.8%. Trident Limited up 1.8%. TV18 Broadcast, it came out with its numbers and it's up 1.6%. It's made a marginal profit, although the other TV18 company, Network 18, has 66 crore loss. India Bulls Housing Finance up about 1%. Diwan Housing Finance numbers will come out today, 1.1%. Expected anytime between 10 to 11 today. NIIT Tech is up about 1%. L&T Finance Holdings up about 1%. So that's the broad picture. Kotak Mahindra Bank is the top loser right now on high volumes, high turnover, 1.5% down. SIAT down 1.3%. Century Textiles down about 1% at the moment. Just want to take a look at what is happening in the Nifty big cap space. As I mentioned, ICICI Bank is the biggest gainer. Infosys is up about 1%. NTPC up about 1.8%. And Kotak Mahindra Bank is the biggest loser here. Haryar, one counter which has been taking a bit of a beating is HUL. If we can just pull up HUL for you. HUL has been taking a beating for the last few days, ever since its parent company came out with its numbers and the report that India is also not doing that well. Do you think that there is any value in HUL? It hit a 4-month low, I think, on Friday.
I would probably wait for the stock to settle down, because I do agree that there seems to be some value. But historically, we look at HUL. Typically, whenever there are concerns raised over the margins, and we have seen that many times in the past, the stock tends to get into a kind of a prolonged downtrend. So I think now, after whatever the parent Unilever has said, and let's not forget that India constitutes a very, very important part of Unilever worldwide. And when they express concerns over the Indian business, I think it obviously means that there are definitely margin pressures, there are definitely growth worries, which may turn around over the next 6 months, 1 year. But for the time being, I would probably stay off lever. I would let the complete downtrend of the stock to play off, probably in another 40-50 rupees downside. And then I would look at buying HUVR in the markets, in the current markets.
Right. Sushil is also now joining us this morning. Sushil, good morning. What are the picks that you have?
Good morning, Pankaj. Thanks for having me on the show. I think based on SR deal which is announced on Saturday, I clearly see that corporate banks in India which have underperformed the consumer banks in last 2 years, we have a great scope to recover, and because the stress assets led by not only SR but many such deals can happen, I think the outlook on corporate banks will emerge as a positive trend, and the last 4-5 corporate banks which have a big balance sheet should be a key way to watch out, be it private sector or public sector. Second thing, the inflation numbers in last week, along with the bond market proxy, all these give a clear indication that corporate banks may outperform the consumer banks in next 3 to 6 months.
Right. So which are the corporate banks that you like?
I think SBI, Bob will be the top 2 in the public sector. The small banks in public sector are very attractive if you look at price to book basis. So you need to do homework on bank to bank basis. So I'm not being specific there. And if you look at private sector, I think ICICI and Axis will stand out because of the de-stress scenario right now likely to pan out.
Right. Apart from this, would you also look at the oil and gas space? So we've had Petronet, which has done well. We've had the entire oil and gas sector, which has been doing well. And this big deal, generally deals tend to happen either at the bottom of the cycle or at the top.
See, just look at SR's entire deal. 72,800 crores paid for 20 million tons of refinery, 1,010 megawatt of power, and 2,700 of petrol pumps, basically fuel stations. If you just break up 1,010 megawatt of power station, which you value at 6,000 crores, 2,700 petrol pumps throughput basis you may value at 5,000-6,000 crores. So if you deduct both the numbers from the equity value which is paid at 72,800, 60,000 crores comes there. So the enterprise value for refinery roughly works out to 3,000 crores per million ton. If you apply that logic to Reliance, operates at 68-70 million tons of refinery, purely standalone on refinery itself, it comes to 2,10,000 crores. And if you take the EV basis calculation on the asset, similar may be the case in Reliance where power and infrastructure for throughput, because the Vadinar port they paid 2 billion. If you add that 72,800 plus 13,300, the throughput was 28 million tons last year as per what the numbers available on the project site. And the capacity is being stated at 58 million. Reliance will have double. So that is a clear proxy that Reliance refining and marketing business on a conservative basis will be 2,25,000 crores. An optimistic scenario can be 2,80,000 crores, where the entire market cap is available at 350. So if you do your maths, Jio has invested 20 billion, Petchem business has invested 15 billion, which 35 billion is yet to fructify any top line result. The existing core businesses are available virtually free. So I think that seems to be a good, if you look at re-rating of valuation. The similar is the case, 80 million ton IOC likely capacity in next 2 years, existing operating at 65, market cap is at 2,000 crore per million ton. BPCL is a little richly valued because of overseas gas, oil and gas assets. So I think the oil and gas space and the corporate banks are the key beneficiary, and some of the port logistic companies which have crude related business may be valued based on this transaction for future PE deals or any kind of other acquisition modes which can happen.
Right. Sushil, as far as Ultratech Cement is concerned, we were just discussing with our earlier guest. You think this time around the numbers could be muted because costs have gone up on a QOQ basis, and if you just look at the overall demand or the IIP data that we have, it's not pointing out towards any major growth.
I think most of the analysts have started talking about costs going up, led by petcoke to some extent. But I think the petcoke number would dampen the sentiment on a cement maybe 3, 4, 6 months later, maybe in the next quarter, the quarter to come by, the third or the fourth quarter. Current quarter, I don't see much cost impact likely to happen. In fact, I am witnessing pocket to pocket lot of optimism on cement, specifically consolidation, new capacity coming up, and demand imbalance in certain pockets is, like specifically in Andhra, is showing a positive sign. So the supply from Andhra is looking less to other states. Same way central India has taken a consolidation, and the construction activity based on very many events are leading to positivity. So I don't think so in cement we can be bearish at all at the current level.
Right. Let's pull up Fortis Healthcare. It's up 10% right now. We mentioned it at the start, but it's extended on to gains in the last 10 minutes or so. So it opened up about 5 to 6%. Right now it's up 10%. There has been a report which has come in from Motilal Oswal. Plus, they have acquired 51% stake in Fortis Healthcare in terms of their hospital, which was a part of the deal that they had proposed earlier. Hariyar, any view on Fortis Healthcare? SRL Diagnostic, could it be like Dr. Lal Path Labs, a great listing or a great relisting sort once the demerger happens?
Hard to say at this point, but I think sentiment should be positive, because if you look at any of the diagnostic listings, be it Dr. Lal Path Labs, be it Thyrocare, I thought most of the listings have been quite flattering, and most of the stock performance have also been quite flattering. And I don't see any reason why SRL Laboratories should not also be equally flattering. So yes, at least in sentiment terms, I would believe that Fortis should have a fairly good price movement after listing.
Right, but one can start to buy into this space. So Fortis, Polo Healthcare, they've underperformed quite a bit in the last 1 year.
I would honestly stick to someone with a more all-India robust business model, like probably a Dr. Lal Path Labs or even a Thyrocare. But yes, you can look at SRL as a kind of a proxy for the diagnostic space. Although I would still wait for the stock to deliver on a few more quarters before we start buying into that stock.
Right. Ruchit, any view on Diwan Housing? They declare their numbers today. It's up 1.5% ahead of the numbers.
I think overall trend for the stock continues to be positive. We have seen recently last 5-6 months the stock has been forming this high top high bottom structure, and even if we see a bit longer term charts on weekly or whereas the monthly charts, the structure still continues to remain positive. So I think this uptrend could still continue on the higher side up to 320 325 levels could be seen in near term. The momentum readings are not showing any kind of negative divergence or anything at current levels. So I think this uptrend is still sustainable, and even from short term trading perspective, 320 325 levels are quite likely on this stock.
Right. So would you buy if there is a correction after the results?
Yes, definitely any corrective moves, if the stock comes around 295 or 290 range, I think that should be a good buying opportunity. If we see the weekly charts and then the recent lows which are formed around 277 is a good support. So keeping a stop loss below 275, any dips should be used as a buying opportunity.
Sushil, any view on Infosys, especially after the management commentary? We also have TCS commentary, which was slightly different. How would you look at the two IT majors, Infosys and TCS?
I think the large IT majors result is a clear indicative that the companies are going through transformation. And, as large deals is a little threat, means you can't win $50 million plus deals at a rapid pace. So that 8-10% growth is being viewed a little difficult right now. I think a consolidation mode may prevail over a period of next 3 months. But, currency outlook, how global markets behave over a period based on growth patterns, and how Indian IT companies specifically overcome the current challenges and move to automation, digital transformation, new initiatives. Leadership has to go through this, and maybe next 3 to 6 months we may start seeing some positive result, and this consolidation phase may last for 3 to 6 months.
But would you be a buyer in this consolidation?
I think looking at the market condition, I'm very optimistic on an 18-month basis based on what has happened over a period of last 6 months, be it nature, that is rains, interest rate scenario, commodity prices, various other factors. So market is likely to make a lot of money for growth which is going to happen. So the asset allocation may shift to some other sectors. But rupee at the same time, if it weakens 4-5%, as what today's one of the newspaper headline is indicative, I think people will start looking at it. So if you are a trader with a 3 to 6 month outlook, you should trade with a 10-15% narrow band. But I think if 5-10% decline in these stocks over a period of time can be a very great opportunity for long term.
Right. Most of the reports that have come out for Infosys and TCS are not pointing out towards great upgrades in EPS or sales numbers, but they're saying that downside is limited. That's why your call that if there is a 5-10% decline, the downside will be even more limited, and that's why one can look to go overweight.
I think, very many times you have to take a fixed deposit proxy with the long-term growth prospects. And right now, IT and pharma, the large caps, are going through that mode that if you make a SIP kind of a system for next 12 months, you may not be able to identify and have a winner immediately. But if you've systematically invested in the stocks, partially, I think the stock performance can outperform the market with a longer term view.
Right. Mr. Malkan is also back with us. Mr. Malkan, any view on Infosys, TCS? Both are marginally into green today.
I suppose there's no great move on momentum on the weekly charts and monthly charts, and it's a purely consolidation pattern going on. So I'm definitely not be interested in buying right now. Of course, we can say that the downside is limited, but that does not call for a buy. We need a stock in momentum for a buy, especially for short term if you want to invest or trade. So I'm not looking at any of the IT counters right now for any kind of trades right now.
Right. As far as ICICI Bank is concerned, now it's one of the top gainers today, 4% move with very good volumes. At 252, what is the next level to watch out for?
I would look at ICICI Bank as there was an important support around 240 and formed a bullish pattern on daily chart also, and it has reacted today in a positive way. And now the next resistance is around 263, 264. So that would be the hurdle coming up on ICICI next, and above that, that would be around 275.
Right. And for SBI, what will be the levels?
I think SBI is in a very narrow range of around 250 and around 260, 65. So that's only 10 rupees difference. So I would suppose that anything above 265 would be a good bet, and it will get into a fresh territory and fresh momentum. So then only I will look at SBI as a fresh candidate.
Right. Hariyar, we were just discussing about names like ICICI, SBI, even Sushil mentioned his view about corporate banks. You think the recent deals like, what we've seen for RCom, what we've seen for JPBL in one of their assets, then this deal of SR, points out that, the haircut may be much lower than what earlier or initial people were worrying about for names like ICICI, Axis, maybe even some of the smaller ones which have decent exposure to large cap groups?
Yeah, that's what it looks like, because the original worry was that haircuts on most of these, exposures, especially to steel. Steel was actually the biggest worry, and that was also the, the single sector with the biggest exposure that banks had. That the steel, cuts could be much bigger. But at least what appears from the initial stages is that, the cuts could actually be much lower. But I would still wait out for steel because, see, we have not seen too many steel restructurings happen. RCom was a telecom case, the SR has been more of an oil case, partially steel. But the larger steel exposures like Bhushan, the day those steel companies start coming up, that's when you'll get a clear idea of how deep are the problems with these steel companies. So once stocks like Bhushan start coming into the market, you'll get a much clearer idea of what is the cut that these banks will have to take on steel companies.
Right. Just before we end this discussion, gentlemen, Mr. Hariyar, let's start with you. What are the any disclosures that you would like to make?
No, those three stocks that I've discussed, I don't have an exposure to any of them, but we have surely recommended these to our clients. So you can assume that they would be having exposures to these stocks.
Right. Sushil, any disclosures?
Basically, I've recommended based on the transaction which has happened on SR that most of my clients, I would be recommending corporate banks, Reliance or any of the other logistic companies from a long-term outlook and may have personal investment for long-term from trust.
Right. Ruchit, any disclosures?
Well, I don't have any personal investment in the stocks that we have discussed, but we have recommended some of them to our clients, so they may have some position.
Mr. Malkan, finally your disclosures.
I look at the couple of stocks which are recommended. I don't have personal position, but definitely have been a recommendation for my students.
Right. Thank you so much, gentlemen, for joining us this morning. Always a pleasure talking to you. Taking a break. Coming back in 2 minutes. Sensex is up 46. Nifty is absolutely flat, just up about 1 or 2 points.